Hi, Sean Gavigan here. Wanted to address a situation that's become pretty common and may get more severe before it gets better. And that is rising automobile insurance rates. And to combat that, oftentimes people remove comprehensive and collision coverage from an older vehicle to save some money and try to offset that increase. Historically, that's always been the way to go. It's been a good idea. When you're in an area that you know you're relatively safe, most people have insurance, and you have off-street parking and you're a good driver, you can think, okay, well, my risk is relatively low. Blue Book value's X, that minus the deductible. I'm not gonna be left with a ton. I'm willing to roll the dice with that amount. What's happened with the microchips and the lack of access to them, just backing up, back in the spring of 2020, automakers realized that they were not going to be selling as many cars because not as many people were going to be commuting to work. So they foresaw a lack of demand and they slowed production. When they slowed production, that slowed the demand for microchips. So the microchip manufacturers had to look elsewhere to get rid of their chips. Coupled with that lack of demand was an increase in demand for those chips for cell phones, Chromebooks, laptops, etc., because so many people were learning and working remotely that it created this other demand. So the microchip manufacturer said, no problem, we don't have to sell them here, we'll sell them over here. And then have commitments to fulfill, so those chips are spoken for. So now auto manufacturers are starting to manufacture vehicles again. They have been, and there are tons of them in some cases that are already manufactured, waiting for microchips to be installed. These microchips are tiny in some cases, and some there are tons of them in each vehicle. And without a lack of production, or with a lack of production in new vehicles because of the lack of microchips, the value of these new vehicles is up. Also, with the lack of availability of new vehicles, you have a skyrocketing value of used vehicles. So with that, comes increased cost if you go to buy a new car. So if your auto rate goes up and you decide that you want to remove comp and collision from maybe a 10-year-old car in order to, in an effort to offset that, you might, if that car gets totaled, you're not going to get anything for it if you don't have comprehensive or collision coverage, depending on the scenario. And then if you go and try to replace that vehicle, it's going to be, from what we're reading, 20 to 30% more expensive than that vehicle was last year. So if you have a 2012 vehicle that's worth $15,000, it could be worth $18,000 to $20,000 if it was worth $15,000 last year. So don't be so quick to remove comp and collision. Maybe you increase a deductible, that might offset it slightly and still give you some coverage in the event that you had a total loss, God forbid. So just something to reconsider. Talk with your agent or talk with us, and walk through those numbers and see if it makes sense. Hope that helps somebody. Be careful out there. We'll see you soon.